Well, hello, folks. I'm L.A. Little, and this is your daily TA wrap, where we take a look at these markets and we do it from a different perspective each time, asking ourselves what happened today and what does it tell us about the coming days and weeks and months and years. We do it neoclassically, looking at supply and demand on the charts along with trend. Do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from my beautiful base in the Rocky Mountains. All right, folks, so what do we have today? We have another market kind of hanging, and that was despite some selling that took place off of earnings. But I'm going to take tonight and more than just looking at today, I want to back up and think about this in a much broader perspective than we have been doing so far. Before we jump to that, let's quickly look at the numbers here. They were basically flat today. I mean, the biggest move was in the Russell up 0.5%, playing catch up, which is kind of what we had talked about it would probably do. Dow was down slightly. We had gold down today. Bonds got hit. The safety stuff got hit off news that Russia is going to back off in Ukraine and appease the Ukrainians somewhat. So, I don't trust Russia. I don't trust Putin. Maybe he's not going to do anything right now, but he'll be back. Those guys never stop, right? They keep coming back for more. So, it's a short-term relief, and the market got a little push off of it. The thing that was interesting to me is it didn't get more of a push. But it did come all the way back. I mean, the NDX was actually down, gap down today. Google, IBM, and some other numbers. Put this on 2 days. You can see right here, and actually they were down a lot more than this to start. The overnight trading, they'd actually pushed up quite a bit by the time the market opened, and still it was a gap down. But it didn't take them long. They got it back up there, and once they got over it, they pushed, and then a little selling at the end of the day. But for a day where Google and all of the big cap tech was getting hit again, we saw CMG down big today. We saw some other earnings numbers. A few of them popped up, but a lot of them sold off today. If I go over to my earnings board real quick, Google down 3%. STLD, which is a steel stock, down 4.5%, almost 5%. We had SanDisk up 9%. IBM trading down 3%, one of the larger weightings in the industrials, the Dow Jones. Those were the biggest movers, and then of course Travel Zoo down 9%. Morgan Stanley up 3%. Those were the big ones. CMG down 5%, almost 6%, $32 off of $5.50. Trading at $5.20 at the close. So big numbers, big moves. That's earnings. It's hard to make these earnings, even though they talk it down so they can quote unquote beat. It's hard to really get any significant push off these earnings at this particular point because you really don't have the increase in sales that's really going to give you the multiple expansions that you need to make these stocks quote unquote cheap again. So that's the issue, and I think it's going to continue to be an issue, which kind of leads into where I wanted to go. But quickly, let's look at what happened today and what it tells us. So the first thing, we saw this last night. We saw the retest regen. We saw it get over it. It stayed over it, folks. It came back in, tested right to the top of it, stayed over it. That continues to confirm the idea that we're in some larger trading range again. And I suspect we're going to be in it for a while. The next test on the S&P is going to be right here. And as I said, as we started the show and we were looking at the ending numbers, as the S&P climbs on up there, we're playing catch up over in the Russell, which to me is going to be the make or break one when it gets back to do the full retest regen off of its swing point low break because it's been the weakest. And so that, as you can see, is not that far away. We can hit it about the same time the S&P hits that area that it should fill at. And then that's going to be the crucial test, right? Is can they get over this or not? I suspect they're not going to get over it on the push. You're going to get some sort of a pullback. And then the issue is going to be is, does that pullback hold and you get some sort of an ABCD structure to the upside? Or does it fold, right? You come back up, you can't break out, you get another ABCD going down, and then before you know it, you have this larger one that's in place trying to break down too. And so that's really the way this thing's setting up. We're going to see that next week, and that really is kind of the whole story. I didn't get a chance today. I was pretty busy doing other stuff, but I didn't get a chance really to flip through the sectors. So IYT, okay, so here's another sign, and this is what we were looking for. Gets over the breakdown bar. That one's trying to go back to the top again. So IYT confirming it. I saw XLE broke out today. So if I pop over here, XLE, that one actually broke out and extended yesterday, and broke out yesterday and extended today. Let me see if the OIH is moving with it. So we had some earnings in that sector, BHI, Baker Hughes. So that one actually tested the top, failed, but had volume, so it will try again. BHI, not a pretty spot up, right? But it actually did do the gap up, and that looks like it just finished off an ABCD structure. Yeah, right to the top. So that ABCD structure there is from there, and that looks like just about did it. So it finishes it off, right? It's going to come back in here and probably test this before it's done. When you get that kind of a candle after an extension, you got nice volume. You're going to leave volume at the top. You'd love to see it come back down here. You buy the retrace, right? Those are the kinds of plays that you like to make. What was the other ones? Let's go through the other ones real quick and see if they... So XLB is right back up to the breakdown bar. XLF, I don't think even got there yet, and it hasn't. XLK, this one had some weakness today, can't get there yet. XLI, that one got over it. So that's two of them that got over it. XLV, not even close yet. XLU, these had already broken higher. This one actually leaves volume at the top. And that one looks like it's going to, you got to get careful here. This one looks like it's getting ready to pull back pretty soon. You'll probably get a little bit more testing to the top, but it's about done. XLP, and that one's just climbing higher. The safety there, nobody wants to leave. And the last one, XLY, the discretionary, hasn't gotten by. So we got two strong ones. That's your IYT, the XLE. And if you remember, 3-4 days ago, those were the two we identified as probably being the stronger ones. And so they, in fact, proved that way. When we got the Russian news, they sold off the bonds finally. Now, the bonds had already finished up an ABCD structure to the upside. And the question was it going to go sideways or was it going to pull back? Well, it was going sideways, but now pulls back. Volume not that bad. Test into this bar, which is where the volume is, and closes under it. So that says it can come all the way back down to these swing point highs. And that big range that was there, if you remember, for a long time, we had a big range that we were trading. It was in here, and then it was about halfway down was the middle of it, right? Well, now you've tacked on another range up here. Right? You didn't quite get as high yet, but I suspect that you're going to see the next test take it up to about that far. And so this is just coming back, going to try to set up some sort of a small ABCD structure, maybe a little bitty one, right, that takes it about up to that high. So bonds pulling back, that helps the market. At some point they'll reverse again, probably go the other way. Gold could not move yesterday. Looked to me like it was going to try to come back. It is trying to come back. You got a big bar down, that bottom 124.60. We got underneath it, less volume. Well, it held. It closed 124.75. Yeah, so it held. It can hold here another day, it looks like, but it does look to me like it's going to try to come back. But not yet. Not yet. It just doesn't have the volume yet. So some more sideways action. And, you know, if you get enough sideways action and you can't break it down, then you will get your move back to the upside, right? Because there is an ABCD structure back here to the upside, right? The question is you know, is it going to break that way or not? So far, all your volume tells are to the downside, not the upside. So when you look at it from that perspective, that doesn't lend itself to this idea. What it really lends itself is to an ideal of a small bounce here that brings it down farther, breaks the swing point low, comes back into this high volume bar, maybe trades as low as the bottom of that bar, and then that's where it tries to put in another bottom again, which is down here at the bottoms, both on the daily and the weekly. I suspect silver is probably weaker still. And silver's hanging pretty good too. Dollar's really not doing much, just hanging there. So none of those are affecting anything. Now, let me pull this back, excuse me, and let me talk about a much broader perspective. I'm going to put this on a monthly, and I'm going to bring up the S&P 500. And the reason for doing this is, you know, a lot of times, you know, you get so tightened in on what's going on that you kind of lose perspective of what's happening in the bigger picture. And I'm going to be doing a radio show on Monday. I'll have the links up on the site if you want to listen into it. I think it's like 3 o'clock Mountain Time Monday, or 3:15 or something like that on Monday. But we'll post those links up. We'll put them over here in the resources section if you want to listen in. And I'll be talking about this probably to some extent, or at least I'm going to try to. We'll see where the conversation goes. I'm doing it with Winning on Wall Street, Mark Mandel, who calls himself the Wiz. But we'll be talking about a few things, and hopefully we can bring that in. If you look on the monthly, and you consider, you know, this run, right? It's been kind of a straight up move, right? And a lot of people love to draw these channels and stuff, and yeah, I mean, those channels are still in place. Everything looks good, right? This thing can just march on higher is kind of the idea, as long as it doesn't break down. That's one way to look at it. Rather than waiting for some sort of a trend line break, because the problem with the trend line, as you know, is it depends on where the hell you start. I mean, if I start the line here, it looks a lot different than if I start the line here. And so it's a kind of an arbitrary thing. I mean, what do I do if I start the line there? I have two of them. Is that good? When it gets back to here, is that good? Well, how do you know? Right? That's the problem with all these trend lines. If you start all the way at the back and bring it up, it slightly broke here. Is that a problem? You know, again, the trend lines are an issue. I used to try to do all this stuff, technical analysis, using the old classical stuff. But what's really important is the volume characteristics of the moves at the test points and those tests themselves, right? And how the market behaves. You know, do more buyers show up or more sellers? Because that's really what drives price. So we had a breakout. We had a breakout here. We came back. It was suspect. Suspect breakouts have a higher tendency of coming back and testing before they go too far. They don't always do that, but they do have a higher tendency to do that. So this one breaks out, comes back, retests, regens higher, right? And it does it on the right volume characteristics and everything. And so that allows us to make the next move. And then here you get a breakout as well. That price point is $15.97. Keep that in mind as we go along here. This is an ABCD structure up on a monthly, right? And that monthly ABCD structure goes from here to here and then back up again. And it's not quite complete. It's not far away, but it's not complete. It's about 3% higher than the high so far. It would be a completion of that structure. So on a monthly basis, we're almost done. Okay, that's the first thing. If you flip over and you look at some of these other indexes, and then this is what's going to finally make a little bit more sense. If you move over to the Nasdaq, the composite, the broad composite, and you say, okay, what's it doing on a long-term basis? Nasdaq, same sort of thing, comes up, ABCD structure, right? And it's finished it already. It's done. It's already done what it was supposed to do. Why is the Nasdaq trailing? Why is it having a harder time? Well, because it's already projected to where it was going to go, right? It's already done it. And when you do that, you usually get some sort of sideways action at best before another leg higher, if that's what's to come, right? Because this could easily set up the next leg higher, right? That's how these things work. Or this was the high and you start to get the breakdowns, right? And you come back. Either one's possible, but you're in a range now, right? It's done what it wants to do. But the S&P hasn't yet. It's not quite done yet. The S&P can still make new highs while the Nasdaq just waddles around. Or, you know, these things are not exact sciences. I mean, we're talking about a one-to-one move. And I'm going to go back to the S&P now. We're talking about a one-to-one move over a large number of points. This low was 1343. That high was 1687. Okay, the difference between those is 340 points. 340 S&P points. That's not a small number. Matter of fact, 340 points onto the 1343, that's about 25-30%. And guess what? That's about what it did yesterday, last year. Right? I mean it did some ridiculous number, but 26 or whatever the number was, but it's a large percentage, right? But it's almost done. And when it gets done, it should do the same thing. Now, it may already be done. That 1897 may be it. We may not make it up to the 1959, which is the number. But then again, we may make it to 1959 and the Nasdaq just does a test of the highs and can't get any higher or something. We'll have to see. The point is that we're extended here. And if you go over and you look at the MTTFs, the mean time to failure, they're extremely stretched. Very stretched on the intermediate term time frame, very stretched or becoming very stretched on the long term time frame. All of those things suggest that it's going to be very hard to get very much higher. Right? It's going to be extremely difficult. It's not going to be something that anyone, it's not going to be something the market's going to easily do. Now, that doesn't mean it can't. I mean, it certainly can move the extra 60 points. The Nasdaq can make new nominal highs, all that stuff. But it's going to be difficult to get any kind of significant rise like we've seen here, right, on this time frame. The other thing that you should consider is if that's the case, then what might the pullback look like? And the ones that we have to work with on this particular index are these, right? And notice that they got smaller and smaller on the way up. You had some big ones at first, and then just little bitty ones. Also notice the time frame of all this happening. A lot of the QE stuff started happening right here. Right? Matter of fact, if I remember right, the big QE stuff happened right about there. That was the first big shot of it. And they got smaller and smaller corrections, and we keep going up. And there's been basically no correction now for about 15, 16 months. Now maybe we call what's going on right now a correction, but if I'm looking at this chart, that doesn't look like a correction. And certainly on this chart, it doesn't look like a correction. And if I go to what everybody's whining about as a correction, that one doesn't even look like a correction on a monthly time frame. It just looks like a small pullback, right? I mean, that doesn't look like anything like these, right? It looks more like these at best, and not even that yet. So what it suggests to me is that we're probably going to see a larger correction somewhere down the road here on these indexes. And that correction is going to be one that probably gets your attention, and it's going to reset on the weekly. Now the weekly typically, this chart typically does not reset on the first attempt. In other words, when you come back to try to break a swing point low like here, it's very difficult to break it on the way back, right? It's not an easy thing to do because you usually, if you've had a bull market, which this has been, you usually have a very long way to go to get back down there, right? And you're pretty exhausted by the time you get there. And I'm talking about the market, right? The selling just exhausts itself. And so it's harder and harder to break it the farther you go up. What makes it easier? Well, what makes it easier is when you don't go back up that much. And the next time you come down, you're closer. And when I look at this chart, that's the way this chart's starting to set up. There's a good possibility that the Nasdaq isn't going to make new highs, right? Isn't going to get back to new highs, and isn't it even going to get back higher than, say, that point. If that's true, and if you draw this in and you take it to there and you bring it down, it's going to break on this time frame. It's going to get a faster move at the end and give you a swoop buy somewhere down in this area or maybe down here or somewhere. And you would have to, view it at that point. But that's the way this is trying to set up. Okay, the contra argument is that this one being the S&P 500, isn't done yet. If the S&P 500, of course, goes up, starts making new highs and breaking out, it is going to drag that Nasdaq higher. That, to me, just simply probably delays the larger correction until later this year, not earlier. We're going to get that correction. And I can't say that with certainty, but I feel pretty sure that's going to happen. And that correction is going to set up a really good buying opportunity when it finally comes around, because I doubt it's going to be any kind of a, bear markets, they usually call them 20%, right? The Nasdaq corrected like 10% off the top already. So, I guess it could be called quote unquote a bear market, but it's not going to be a cyclical. It's going to be a cyclical one, right? It's just one that comes and goes, in my opinion, given everything that's happening, because I don't see the economy falling off the cliff anytime soon. But all that stuff can change. That's why I try not to predict monthly charts, because all that stuff can change. For all I know, China blows up and the world goes to hell in a handbasket, just like when we blew up, because they're such a large economy at this point. I mean, those things can happen. Mistakes can happen. Everybody's going to do their best to keep all the balls in the air, but sometimes you got too many balls floating around. All right, so I just wanted to digress a little bit tonight because, a lot of times we just get so close to this that we don't see the bigger picture. The bigger picture right now is still positive. There are negatives out there, but so far they are not the primary worry, right? What we have to do, and what we always do here, is we have to keep looking at these things and saying, okay, what could develop? How could it develop? We see the potential problems here. Okay, now that we know those, what's happening on this time frame? Right? We'll come back down to the next lower time frame, the shorter one, and say, okay, what's happening? Well, we know it tested with more volume, although it was slightly less volume than here. Therefore, we're probably going to get a decent bounce. We're getting that bounce now. We're coming back into this resistance zone. This is probably where we're going to get some sort of pullback. Now, do they buy the pullback or not? And that will be the question. That will be the signal as to whether this elongates farther out or whether we come straight on back down and we set up another ABCD structure that's going to blow out these bottoms, and we're going to do a lot faster than we thought we were. Right? Because right now it looks to me, the way these things are set up, these guys are not going to break quite yet. S&P is going to hang up in that range it's in, and then we're going to elongate this thing out for a while, you know, and we're going to sit here in this larger range that's in place now because of the action in the S&P. We're going to sit in that larger range that's in place. I was going to pull the S&P up. That's in place up here, right, and stay there for a while. And I'm talking about this range, right? At some point, that probably will break, and we'll get the, you know, the real test down here. But these will be testing long after the Nasdaq's already broke. The Nasdaq will be the one that breaks. That and the Russell. All right. Well, that's it. I guess that's a good weekly wrap on a long weekend. Give us not a weekly, but I guess it's a weekly, right? It's the last night of the week broadcast. But I'll be back Sunday. We'll talk about a few more things Sunday. See how the weekend shapes up. Some portions of the world markets are trading. I know that most of Asia probably trades. I think Europe's probably off. So we'll only see the action there, and then of course by the time we're broadcasting, Asia will be back on, and we'll see what they're doing again. Looks to me like you know, we're about through with this bounce, going to get some sort of a retrace, and then that's going to be the next question, right? Do they buy it or not? And right now, I'm thinking they probably do. Folks, have a great one. Thanks for joining me. Take care of yourself. I'll see you next time. Until then, I'm L.A. Little. This is and was your daily TA wrap. Have yourself a great night. Take care. And until next time, good night.